In this video, we're going to look at why the counter trend line break is so powerful on all time frames. Stay tuned. Hey traders and investors, a very warm welcome to you. Thank you for tuning in. Okay, so counter trend line break. Let me explain what it is. Let's look at how it works and let's look at why I think this thing is so powerful. I've been using it for many years, still use it to this day. One of my favorite kind of trade strategies. It's not really a strategy as such, but methods of getting into a trend that's running strongly. Okay, so the theory is this. We have a trend in one direction. That's the underlying trend. And some of you are going to say, hey, this is Elliott Wave and other names for it. Yes, you know, there are lots of great guys out there who have studied this kind of stuff and they've put out their own take on things. But ultimately, you know, I look at stuff in terms of supply and demand. I don't try and put myself in one camp or another. I think that all these guys are great. Gann, Elliott Wave, you know, Fibonacci, all this stuff that can be used is great. It's got names for it and they've got specific criteria. That's really good. But my way of looking at things is purely on supply demand. I might take something from one, take a little bit from the other, and kind of mold it into one strategy or one element of looking at the market that makes sense for me. So if this is familiar for you and it's got a name that's got like a structured name from a textbook, probably does. But I'm looking at it from a supply demand perspective. Anyway, so the idea is we've got an underlying good solid trend, the primary trend pushing up. Then we have a counter trend move against that trend. Now, this is really textbook stuff, guys. The bigger trend is the one we want to align ourselves with. The counter trend moves are always going to happen, and we're looking for a continuation in the direction of the trend. Okay, some people are going to say, all right, now the traditional way of doing it is you look for a break of this high here, right? You look for a break of that high there, and you go long if we were looking to go long. Fine, makes sense to me, but I think you can go better than that, and I know you can go better than that because this is a powerful strategy. What I'm going to do is I'm going to go back to the Euro US dollar on a daily first, and then we're going to go back to a shorter time frame. So something for you swing traders, something for you day traders. Here on the Euro US dollar, we've got a good drive up. No one can deny that this is a nice solid uptrend. Okay, and people who are drawing trend lines are probably going to draw something like that or a variation of that. Again, we're not trying to be too accurate or be pedantic about how we're drawing trend lines in this video. We're just talking literally about the structure of this trade. Good solid uptrend, multiple months, looks good on a daily chart, fine, nice angle, all good, plenty of pullbacks, nothing too aggressive, nice, solid, structured, pretty standard textbook stuff for the US dollar, Euro US dollar. And those of you who want to kind of draw parallel lines, it kind of almost fits into that. But let's just keep it simple and keep it uptrend here. At some point it breaks. Okay, and this is normal behavior for the market. You're going to be in a trend, you're going to break the trend. You know, a lot of people will jump the gun there and will start going short. They'll start covering the longs. Whereas in reality, you've got to give markets a little bit of room to breathe. You've got to let them unwind a little bit. Let them retrace. Let them just test the other side. Let them test the supply, test the demand. Just see what's going on a little bit before you kind of get carried away. Especially if you're swing trading, you've got to allow it to kind of mature and let it do some stuff against you, against your position. So in this scenario, we break the trend line here. So there's no reason to panic. And of course, if you overanalyze it, you can say, oh yeah, we've triple topped here and we've broken the trend line. I'm all in short. But the first time a market breaks a trend line after a big trend doesn't necessarily mean it's going to go back to where it was. It does sometimes, but not always. So there's a way and a method that you can use. Let me just drag this down a little bit. You'll see why in a second. How we can use to get back into the trade or get into it if we miss this primary trend. So let's say we miss this primary trend. We're waiting for a reasonable counter trend move and then a resumption of the trend. So what we can do is wait for number one, which is a trend line break. Then we can start to draw a counter trend line against the direction of the trade. So in other words, as we pull back, we've broken this trend line here. We've now got a counter trend line against the main direction of the trend that's just kind of pushing back into where we were, so backfilling a little bit. And now we wait for that to break before we hit that long trigger. Let me find my brush. There's my brush. There would be our long entry right on that break of there, and then our stop is going to be below here. So it's very structured. It's within the kind of strategy that we've got of staying with the trend. We're waiting for a few things to happen to try and fine tune our entry. So we wait for that drive, we wait for the trend line break, we wait for a counter trend move, we draw our downtrend line, and then we wait. And the beauty of this, guys, is this. This is the beauty. If this thing reverses and does this, it doesn't matter. We're not in. We're only in if it breaks. And if it does that and breaks and pushes back, again, it doesn't matter because we've got a very structured risk. A lot of people kind of chase these trends, I see a lot of people doing this. This is exactly the kind of thing that people do. And, hey, I've made all the mistakes under the sun, so this is not pointing the finger at anybody at all. This is the kind of stuff that I've done. Is you see a trend and you want to get on it. You're like, listen, I know I've got to trade with the trend, let's make the money. You know that. And so you start to see this and you start to maybe buy, a breakout here. And perhaps you're a bit late to it. If you're early, that's great. You feel more comfortable. Generally, you're not. You're late to it. You want to get on board it. You kind of done your research. You think this is going up to 126 or whatever it may be. You start buying it here. You get a couple of days in your direction. You think, no, that's nice. I've got a kind of 50, 60 pip head start here. Let's get rolling. Then it starts to kind of stagnate a little bit. You kind of then look to see, okay, I'm going to draw some trend lines in. Trend line's still holding. If that goes, I'm going to come out. And it goes, it breaks, you get 2 days against you, and you come out and you go, it's broken. And maybe even flip it short. But unfortunately, this is something that really is just the natural behavior of the markets. And if we step back and say, I want to wait for that deeper retracement before I go long, let it do its unwinding thing, let it do what it needs to do before I get involved in it again, you're getting a much, much better entry, and more importantly, a structured stop. Your risk is X, very, very finite, very, 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 very structured. There's no ambiguity to it. You can risk X amount of money. You know what your pips is going to be, multiply it by your position size. Very simple, and then you can kind of extrapolate off what your initial target was going to be if you'd have chased it on here. So it's very, very powerful. Okay, just moving on for intraday perspective. It's the same thing intraday. Again, this is where I love to use it a lot. So when we get those really powerful moves and get those counter trend cycles, let's draw a trend line here. We have this kind of scenario. Okay, we've got an uptrend line here. Now we start to break the trend line here, right? We start to break the trend line here, and we have a counter trend move. Let's zoom out a little bit on this. And the important thing to note here is that when we start to break here, let's put this downtrend line in here. We start to break. We start to kind of do a counter trend move. We start to break. You're in, and look how bad this trade is, but how you get away with it so much. You get away with it until it kind of almost touches the high again, gives you whatever it is, and then finally rolls over and takes you out of the trade. But by that point, look, you've got kind of 90 points in the bag, 80 points in the bag. And this is a really, really bad setup because it's overnight, it's over the 24-hour period. There's no real reason to take this, but my point is with this is that look how structured you can make it. You can say, okay, I'm in here, my stop is going to be under that low there, very, very tight, 25 ticks or something. Sit with it. Hey, I get like a 90-80 tick move. Maybe you don't take it out because maybe you're looking to take out the highs. Fine, I get that. And maybe you got stopped on this kind of downdraft when they open the next day. Of course, that's the way that is sometimes with trading. But the point is it protects you. And this is what the key thing is, guys, with trading strategies is you want it to protect you even if you take the worst, horriblest, grimiest chart that ticks no boxes whatsoever. That risk is still protected. There's no ambiguity where the stop is, and you're going to take the trade. And whatever happens, you're protected. That is the key thing, because we're risk managers first. And before I leave you, I just want to point out this little thing. If we're really going short term and we're really going micro scalping, and we're on a 5-minute chart here, so on a 1 minute this would look even better, but let's just take it for 5 minutes for now. If you start even doing that and say, okay, look at this, we've got a decent drive up, 100-point drive up in whatever that is, kind of 10 candles and 5-minute candles. I then think, right, I don't want to see that trend line break. That trend line breaks here. We draw that counter trend trend line. We buy the break, bang, we're up for another level. This happens time and again in multiple time frames. You can even say it potentially slightly does it there. But the point is, again, we're structured. Where's our stop going to be? Of course, it's going to be below that low. It's going to be below that low. There's not a lot of risk involved in it, but we've got momentum behind us because we've got the trend behind us. Good little tool, this, guys. Nice little trick. It works on a lot of time frames. Let me know how you get on with it. Good trading. Keep the risk manager, whatever you do. Bye-bye.